Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to that closing bell, here to help take us beyond the bell. It's our global simulcast, joined right now by Carol Massar, Tim Stenovec, also blessing us with his presence, bringing together our Bloomberg Television, radio, and YouTube audiences worldwide to parse the crucial moments of the day, crucial moments that Tim missed a little bit earlier. But Carol, you were actually here and keeping an eye here on the markets here. A lot of those tech and discretionary names really dragging the equity market lower.
Yeah, we're going to talk about that. We are definitely seeing it play out in the market environment here, bouncing around a lot. I was just looking, though, at the week overall. I mean, energy is your best performing play, and I was looking at Occidental. It's up about 23% so far this year. We understand why, but, you know, it's just a reminder, again, of there are gains and losses, certainly, within the market environment.
Yeah, sorry to miss you guys earlier. I was out getting a burrito, but I'm back now, and I'm no longer hungry. The SOX is something that I'm keeping an eye on, Caroline. Down more than 2.2%, really underperforming the major indices. We're seeing 28 of the 30 companies in the SOX lower right now.
And it's notable that volumes are elevated. When you're looking at the NASDAQ, we're up about 13% in terms of your average daily volume versus the 20 days. Everywhere else pretty much flat to, if not slightly down. So the NASDAQ, big moves and big volumes.
Interesting, though, the sort of calmness, if we will, the stability within the bond markets. We're in day two, again, sort of wrapping up the comments that we had from Jay Powell. Big sort of movements yesterday, Romaine, as we had a big reflationary upward, but a two-year yield that is mostly steady at about a 153. So we're about 7 basis points from the highs of about 160 that we had last week.
Yeah, and of course, now we're entering into a very critical period, at least if you keep an eye on economics, data, as well as monetary policy. That jobs report tomorrow, a CPI report next week, and then, of course, that Fed meeting coming down the pipe here. The closing bells here in New York, a down day pretty much across the board. The Dow Jones Industrial Average lower by about 0.3%. The S&P going to finish down by about 0.5%. The NASDAQ, one of the biggest underperformers here on the day. The composite going to finish the day down by about 1.6%. And the Russell 2000, those smaller cap names, down about 1.3% here on the day, Carol.
All right, so maybe that explains the split in the S&P 500. Not a whole heck of a lot of conviction, or maybe a little bit calmer, but we had 249 names in the S&P 500 actually showing some gains today. Taylor, 255 lower, so almost an even split there.
Yeah, interesting, Carol, that you bring that up, because that feels similar in terms of the sentiment when you take a look at where we are on the sector level. For our radio audiences, we do every day. It's a sector winners, the sector losers, and there is some green on the screen, Carol, but it does feel defensive, if you will. It's food and staples, it's utilities, it's real estate, it's pharma. In some part, those really feel like the bond proxies, as yields on the long end were falling today. We migrate down to the bottom of the screen. You're off anywhere from 2 to 4.5%, and that's where you see the impact of technology. It's software, it's semiconductors, it's auto components. Those are the worst performers.
Yeah, and I love that you talked about kind of the food area, kind of some of those safer plays that we definitely saw gaining today, because that's what's on my list of gainers. Kroger atop that. It was topping the S&P 500, pretty much finishing near its highs of the session. It was up about 11.6% at the close here. Fourth quarter EPS and sale and same-store sales minus fuel, all beating. They raised their fiscal year EPS outlook, so that stock was certainly a standout. Best Buy, another one of the retailers, up 9.2% in today's session, topping the S&P. And it's interesting, their operating margin outlook for the fiscal year trailing estimates, but the stock up after the company unveiled its longer-term forecast and talked about meaningful growth. And it seems like investors liked what they had to hear. Dollar Tree, and maybe this plays into inflationary pressures and consumers maybe starting to look at alternatives when it comes to shopping. This stock finishing off its highs, but still up about 4.7%, top in the S&P 500 and NASDAQ 100. Fourth quarter net and...
So how much confidence does that give you that the best performers in the S&P on the upside, Kroger, Best Buy, Dollar Tree, and then throw in Brown-Forman, a liquor company?
Are you playing with the liquor part of it? I mean, I don't know. It's not a very innovative trade here, if you will. It's not necessarily, tapping into the technology area. That's where we saw a lot of pressure. So I don't know what it means. For Dollar Tree, though, I will say that investors and maybe the street kind of hoping for a turnaround comeback for some of that as they are raising prices on some of their goods. And maybe that's why investors popped into that one, Tim.
Well, speaking of pressure, Tesla, a company dragging down both the NASDAQ 100, the NASDAQ Composite, and, of course, the S&P 500 as well, finished the day down down by close to 4.9% today, 4.6%, excuse me. Shares of traditional automakers and EVs falling today. Concerns are supply chain pressures. We talked about that yesterday with Rivian, and those supply chain pressures getting actually worse due to Russia's invasion of Ukraine.
Did you see they walked back those price increases, or at least for some people?
Yeah, they did. That's what I'm talking about, Romaine.
You can put your order back in, Romaine.
Did you cancel your order yesterday because of those Rivian price increases?
Well, if they did. They said for those who already had their orders in, they're going to honor the price.
Exactly. So, you might remember on March 1st, Rivian announced that it was raising its prices on by significant amounts, 17%, 20%, even for people who had pre-ordered it. And yesterday they saw big pushback, big outcry, a lot of customers canceling orders. The company came out and said today, of course, that they will honor those previous price increases, and those previous prices, people who did cancel those orders can go back. Still, though, pressure on Rivian stock today, down close to 5%. This is an interesting one. Bumble hitting an all-time low today, following, This is really interesting here. Shares are cratering as analysts ahead of earnings next week are pointing to Bumble's exposure to Russia. Bloomberg Intelligence points out that Bumble has a large portion of engineering talent, of course, in Russia, but also Badoo, which is about 30% of Bumble's revenue, gets 12% of its monthly users from Russia. That's according to Sensor Tower. Development of the apps could temporarily stall, and they could take a hit to revenue.
I think it's interesting. We were having a conversation off camera, Caroline Taylor and I, about kind of all of the sort of tech talent out in a lot of those Eastern European nations, Russia, Ukraine, and sort of what this means, not only for the stocks in terms of the potential sell-off, but I guess where that brain power ends up going if they can't stay in Ukraine and stay safe.
What was the company we were talking about earlier this week, Romaine? It was EPAM, right?
Yeah,
they were talking about accelerating hiring in Latin America as a result of what's happening in Russia and Ukraine.
Absolutely, yeah.
I mean, such impact when it comes to Bumble, also some of the agricultural businesses. I mean, the extent of contagion is the wrong word, but certainly the second order effects that you have to take into account when you're thinking of what feels right now a humanitarian crisis that is happening quite far from us does have real-world impacts, and it has a real-world impact when you're looking at the FX market, because once again we are seeing a search for a haven. You are seeing the yen up against the dollar. You're seeing perhaps some bids for the Swiss franc. In fact, the US dollar in and of itself, the dollar index, was higher to the tune of about 0.3%. That goes back to the second day of Powell's testimony, him really saying, almost echoing a Draghi line from the ECB days, saying we will do whatever it takes to really take on and counter inflationary pressures. We mean the British pound was off about 0.5% against the US dollar. The euro once again under pressure as people pull back any idea that the ECB might hike as soon as September, October. Hong Kong dollar has continued pressure and likely to continue in that sell-off as we see a change in Federal Reserve policy here in the United States. I'm looking across at the FX, not from the FX market to the commodities market for our radio audience. We actually got a breather when it came to oil markets today. Brent crude off by 1.7%, WTI off by almost 2%. That as we see perhaps talk of Iran, the supply coming from there, maybe stepping in and pulling back some of those woes about and concerns about supply issues within the oil market. But look, we're still at 108 level when we're looking at WTI crude, still very elevated. Gas oil still rising, metal still rising, wheat still on the highest since 2008. So inflationary pressures front and center. And of course, that is when we're looking at what has been the sudden whiplash effects over in bond markets. Today, steady in the US, Taylor, but over in Europe, we felt the effect. Stocks move lower, but so too do bond markets. Yields move higher in Sweden, in Norway, in Switzerland, in Belgium.
Indeed, you're certainly seeing bond price higher, yield lower, Caroline, when you go further out on the curve here in full faith and credit. But it is the two-year yield that I think, Carol, we're still so focused on. It's rising 2 basis points on the day, a 153. I've been talking a lot about this number because we've been hearing from Jay Powell. We're focused on the jobs market tomorrow. We're focused on CPI next week. And then, of course, we are focused on that first sort of Fed rate hike that we think that we'll get in just a few weeks from now. That is really where all of these sort of worlds combine, is you're thinking about inflation that is indeed front and center in a very hot labor market.
All right, 6-7 minutes in, and we finally got to the jobs number. You know, Mike McKee was talking about someone who put out some research, and they said NFP not focused on payrolls. It's amazing in a week where we would be talking, nonstop about jobs. We obviously did talk about Jay Powell a lot this week, but of course we were focused on the Russian invasion of Ukraine, the impact on the energy markets, financial markets. But it is interesting, right, that typically it is our focus throughout the week, and there's just been so many other very important issues going on.
Yeah, I have been focused on it and watching the surveys actually tick up from last week to 400 to 405,000 earlier this week to 415,000 yesterday. And now economists surveyed by Bloomberg expect 420,000. Look, not a great history
Right.
when it comes to recent history of getting this right to the upside or to the downside. But it's notable that they've been revising upward.
Yeah, I mean, but we talk about the wide range. I think
range,
Caroline
yeah.
pointed this out while you were out, Tim, a little bit earlier. 730 at the top end, 80,000 on the bottom end. You had a lot of people clustered in that 4, 5, 600,000 range, but a lot of folks below that 300,000 range. So you kind of wonder if we get another big miss like we did the last time.
And meanwhile, we continue to see the knock-on effects of what's happening with Russia, Ukraine. This time, Standard & Poor's coming out to downgrade Russia to a CCC-. Ratings remain on watch negatively. They say that there could be further impact on their overall credit rating, and they really are talking about their net external liquidity position being, at the moment, had been a position of strength.
Yeah, the financial squeeze continuing. We're seeing it around the globe. All right, folks, that's going to do it for our cross-platform coverage on this Thursday. We are on radio, we are on TV, and on YouTube. We will be back same time, same place tomorrow.